Dr. Ken Long describes the collapsing dragon, CD, as a powerful short-selling pattern that often emerges after the failure of an SSC, supported spring crossing. CD is his favorite pattern due to its decisiveness and potential for substantial profits. To visualize the dramatic nature of the collapsing dragon, imagine a roller coaster climbing a steep hill of the SSC after a harsh winter sell-off. The mood is hopeful. It tries to go over the top, the SSC attempt, but loses momentum and rolls back down, the failed SSC. Instead of stopping at the bottom of the hill, it breaks through the tracks, the RL10 support, and plummets into a free fall, the collapsing dragon. The success of the CD pattern stems from its ability to exploit shifts in market sentiment. When an SSC fails, it often creates a cascade of selling, as buyers who were initially drawn to the potential reversal are forced to abandon their positions, fueling further downward momentum. CD acts as a counterpoint to the bullish sentiment often associated with the SSC, providing a clear signal to shift to a bearish stance.